Hello, everyone. Welcome to this session of Life in the Cloud. So my name's Andrew Todd and I'm the Chief Technology Officer here at Iress. And I'm delighted to introduce David Fodor, who's from AWS, and he works in the business development team, looking after financial services clients for those in Australia and New Zealand. And so today I'm going to talk a little bit through Iress's journey with cloud technology, and then I'll be handing over to David, who's going to spend the majority of the session sharing cloud trends and insights from across the financial services industry in Australia and New Zealand. So as businesses, we're approaching the need to see and implement seismic changes within the industry. There are headwinds in front of us. We know they're impacting your business, they're impacting our business, and we need to work towards change agendas that help us deal with those headwinds. And so our aim is that by working together, we can solve those challenges faster. Business is changing, it's changing fast. Expectations of clients, of members, of participants in the industry are changing and evolving really quickly. And tech must really move a whole lot faster to serve these changing needs and expectations. So at Iress, we're building one platform to help us drive efficiency and scale in our operating model. And we're leveraging the cloud to do that. And that helps us then support clients such as you on the call to adapt and move more quickly in your businesses. And so we have been adapting our technology to cloud architecture that is highly scalable, highly available, quite resilient, but also one that's really easy and flexible when it comes to change. We need to think about new propositions, new products, be able to deploy and get those in the hands of clients and users really quickly and easily. And so that's a significant focus for us. And so this type of change that we're moving to is seismic for Iress. It is very different from the model of build a software, it goes and gets installed into a client, to one that is really platform based. Platform in the term of a LinkedIn, an Airbnb, a Stripe, where subscribers or customers utilize the platform for its breadth. It is architected and integrated as a platform, and it serves various needs in a well-integrated, scalable way. And so we have been designing for a number of years and have made some significant progress in that technology change, especially from an architecture perspective, again, leveraging cloud. The size of the change is actually significant now. So we started the transition a couple of years ago, and to date we've moved something like 4,500 services and services that are supporting thousands of clients across the globe. And so we're moving from this very application-based approach to a service-based, cloud-based, cloud leveraging platform approach. It is important for us to accelerate this outcome. And so we're working with AWS and other technology partners to move more quickly, to change our software more rapidly. And so that then, again, allows us to support you in taking on those technical challenges and business headwinds that are there, that are different from what they were 5 years ago. And so we're starting to implement the changes and the platform work that has been underway for those couple of years. It is really important to understand and be cognizant of what it means when it comes to a change management approach. And so changing technology and thinking within an organization is always challenging. But there's an extra level as a software provider to work with clients and make sure that clients come on that change approach with us. And often it means significant change in a client business. And so our approach has been make sure that we've got the fundamentals in place. We have a good architecture around the cloud platform. We have good technology that layers over that is highly automated, so that we get those scale benefits. That we leverage that platform to uplift the quality and ensure ongoing quality, again, through automation. And that gives us the ability to work with clients and demonstrate confidence of taking a client on a change journey with us. And so our ultimate goal for Iress that then feeds into clients and users is that we can go faster, so we can make the change that's necessary more quickly, so that we can do that at scale to support all of the clients that we have in their different journeys, and that we're doing it with a high level of quality, because that experience when it comes to the ultimate consumer is different. The expectations are higher, and so quality is a very important aspect there. And so we think about this as a multi-year journey. We're quite the way through it now. We still have a lot of work to do. We still have a lot of change before us, but the fundamentals, the basics and the good hygiene has been set up, and now we're starting to accelerate changing the software that is actually visible to clients and users. So that's a little bit about the approach that we're taking at Iress. It's very high level. I know Michael Brennan ran a session yesterday who would have spoken with some more specifics around Acurity and the journey that is going within the super business itself. Please, if you've got questions during the session that come to mind, use the Q&A button and we'll have time at the end to answer questions, whether they're for myself or David. But I'd really like to let the expert speak now and pass over to David, who's going to talk about cloud trends in the industry, what he sees, what Iress is experiencing, and some of the challenges and positive things that he witnesses there. So thanks, David.
Thank you, my friend. That was a great introduction, and it's awesome to see the progress that the Iress team have made since when I first joined AWS back in 2017. It was really the start of Iress's full-scale kickoff in terms of the journey to the cloud. So really amazing to see that the journey and the progress that the team has made over the last 4.5 years. Just to reintroduce myself, as Andrew mentioned, I'm part of the business development team here at AWS. I look after financial services across Australia and New Zealand. And I apologize in advance. What I've found is doing a lot of these types of events online over the last couple of years, I talk far too much with my hands. So I'm going to try and keep my hands below the camera line as much as I possibly can, because it gets really distracting. So Andrew, if you see that they're getting in the way, just give me a shout and I'll try and keep them on the table. So when I talk to customers and partners and the many players that we deal with through the ecosystem of financial services with respect to cloud and the why of why organizations choose to go on a cloud journey, most of it comes down to one important aspect, and that is, if I can get my slides to go forward, that is that I think one thing that we do best is we help organizations adapt to change. There is no doubt that the thing that differentiates organizations the most these days is not so much their products, but how quickly they can bring new product to market and how flexible those products are once they get there. Whether it be compliance-driven change, competitor-driven change, dealing with just the vast proliferation of information that is now available across financial services organizations, doesn't really matter. It's really important at the end of the day to be change agile and importantly change resilient. And Andrew talked about the resilience in Iress's platform that is a big part of their journey to cloud. And that is very common to many customers, and I'll talk about a couple of examples as an underpinning driver of why customers have gone to public cloud over the last 10 years. And I won't go back through this because Andrew's already done the heavy lifting for me. Iress, there is no coincidence that I'm here today. Iress has been a massive customer of ours over the last 5 years, and an exemplar of an organization that has executed well on a journey at scale. We're not talking about a few applications here and there. We're talking about, literally, as Andrew said, thousands of applications across their portfolio. So you can see, the data points that I pulled out of, this is out of a case study that we did with the Iress team, I think it was last year or the year before. I just pulled out the proof points that promote the value that the organization is now getting from their new life in cloud, particularly the compression of change cadence, which is really important for all organizations these days. Reducing cycle time for promotion to production while staying resilient and safe and secure. If you can get those two elements right, then you've gone a long way to achieving the objectives of the organization in going on a cloud journey. And I think importantly, what the industry is now demonstrating to the regulator and regulators, depending on which regulator that you're beholden to, is that at maturity in cloud, your security posture and your ability to be compliant and importantly, continually compliant is often far greater and better than it was in your previous paradigm. And we're seeing that more and more play out. And thus the reason why APRA in particular has almost done a 180 degrees on their posture towards public cloud over the last 5 years. If I wound back the clock in terms of when I first joined this organization, it's fair to say that the regulator wasn't at that point convinced of the virtues. Now, I believe there are very few doubts. The only challenge that presents itself now that organizations still deal with respect to APRA is concentration risk. That is really the bigger issue now, rather than is it a safe and secure platform to be running production systems on. We've been working with financial services organizations in Australia and New Zealand since, back in the day when we first established infrastructure out of the New South Wales region for us. But having said that, a number of our anchor tenants, whether they be the big banks or the Suncorps and Macquarie's of the world, were actually consuming some of our services before we had infrastructure onshore. They were using some of our services out of our US region. So we've had organizations that have been on this journey for quite a period of time now. And importantly, as a result of those forerunners and those early adopters for cloud, they've laid a lot of path for those that come behind them. So whilst there are still some laggards when it comes to cloud adoption, and that's fine, there's nothing wrong with that. What I think that they are finding now is the time to get to competency and the time that it takes to get to material workloads on cloud is a lot shorter than it was back in the early and mid 2010s, where the process of getting through the regulator was a lot harder, and they were learning as they went on that journey as well. We have really entered the mainstream now. The logos that I display on this slide that I use are a fraction of all of the organizations that we deal with in the market. These are the ones that have blessed us to become referenceable in this market. And importantly, the nature of workloads that are running in financial services on cloud now are fundamentally different than they were even a couple of years ago. We are, as we move customers along their adoption journey, increasingly getting to what we call extreme inherent risk workloads, including core applications that are system of record for customer information and transactional records as well. So where those were very infrequent and very much outliers in terms of adoption even a couple of years ago, they're becoming very commonplace now. We were doing a count yesterday of the number of extreme inherent risk workloads that we've migrated for financial services customers this year alone. And it's something like 10 to 15 times higher than it was 2 years ago. Just to indicate the state of maturity in the market and the willingness of the regulator to support organizations' journey, because they see the benefit of those that are doing it well. I'm not going to spend time on this slide. The virtues, the benefits of a cloud adoption journey are obvious, and I'm sure everyone listening knows them. When I talk about cost, I don't talk about cost reduction so much as cost displacement. I think it's important to understand, yes, there is a business case for cost, But generally, I like to think about it as a displacement agenda rather than a minimization agenda, whereby organizations who do it well are able to spend less on running infrastructure and doing the heavy lifting of running data centers, etc., and actually reinvest that value back into driving, innovation in their business and creating more value for customers. That's generally what we like to see. Obviously, platform is large, diverse, many services available, highly resilient. The nature of the architecture that we develop for our customers on the infrastructure that we run in this region means that we have highly available, super resilient applications that in the not too distant future will be reinforced by another region coming online for us in Melbourne next year, and then backed up by a region coming online in Auckland in New Zealand. So New Zealand will have their first AWS region shortly thereafter. So we, in the not too distant future, certainly within 2 years, will have more AWS regions across Australia, New Zealand per capita than any other country or region in the world. And that in itself demonstrates just how mature this market is for public cloud adoption. The business case for us to develop both Melbourne and Auckland took time, but it was in the end supported because of the sheer appetite in this market. And financial services is a leading component of that, to actually bring more and more of mission critical workloads to public cloud. The other side of that agenda is just about what I discussed before. It's about change resilience, increasing the cadence of change, automation through everything that you do, particularly the immutability of infrastructure argument is without doubt one of the fundamental ways and means of compressing change cadence and getting much better change resilience through your platforms. And then obviously, as you go along that journey, you can then turn your attention to modernization of the applications that you need to bring back up to speed along the way. One thing that is becoming very apparent when we look at public information and updates that are driven by our customers to market through their annual or their half year results announcements is the value that they're getting from cloud in terms of modernizing their platforms. I found recently when I was doing some research, a ThoughtWorks and Forrester set of information that just describes where customers are getting most value in terms of their tech transformation agenda vis-a-vis cloud adoption. And overwhelmingly, the proof point comes out about the improved cadence, change cadence, and the ability for that organization to get new stuff to market. NAB is a really good example of this, and they released their full year results last week or the week before. It's all a bit of a blur now. Might have been the week before. And part of that discussion, the analysts' investor pack discussion, was an update to the market on cloud, because cloud's been a central plank to their tech transformation agenda for the last 3 or 4 years. And I've just pulled out the quote from Ross, the recently new CEO at NAB, talking about what I was discussing before. It's the displacement of value that they're now investing in their technology, about creating more applications that make a difference either to their internal employees or, importantly, to customers. And I think that we're starting to see more and more evidence for organizations that have been on that journey for a while, that they are demonstrating that shift in where they invest their tech transformation spend. NAB indicated that they now have over half of their whole entire application estate running on a cloud platform, and that they are on the journey to getting to 80% of all applications in the next year or two. And as part of that agenda of moving applications from wherever they exist today to a cloud platform, they've very much taken the opportunity to rebuild, re-architect, and use very much a microservices and API oriented approach to making their ecosystems much more adaptable to change into the future, which is great to see. One of the big assets that they've moved in the recent years to cloud has been their data and machine learning platforms, and they're starting to see some volume come through in terms of the way that they employ machine learning across a number of different use cases, whether it be fraud or retention, etc. And importantly, we're seeing those proof points of compression of change. They talk about a significant reduction in the average time to deliver change, which leads to a massive change in technology productivity. I used to be at NAB many years ago, and one of the big frustrations was that for every dollar spent on technology change, a lot of that would go into just the heavy lift of regression and the overheads that go along with that. So we're starting to see, with more and more automation through their systems, the virtue of being a lot more productive, which means they can do more change at a faster pace at less cost. One of, or two of, the big platforms that they've moved to AWS in the last 18 months have been customer impacting and significantly customer impacting platforms such as their internet banking platform and what they call NAB Connect, which is basically their internet banking and merchant portal for their business banking customers. When they moved it, particularly their NAB Connect platform was somewhat problematic, not as resilient as it probably could have been. Since they have migrated it to cloud, their downtime is next to zero. Their change cadence has been increased significantly. And importantly, they're calling out the fact that it's a much more secure platform in cloud, which is great to see. The other dimension of the why of organizations moving to cloud or using cloud is borne out by what we've seen in the industry around disruptors entering the market and entering the market quickly and scaling from there. And a really good case study to look at most recently is Judo Bank, who listed on the stock market about 3 weeks ago. I think they were the first Australian bank to list on the ASX for 25 years. So, a pretty big milestone for the market. It's been a long time since we've seen a new fully fledged ADI enter our banking system. Judo have built their entire application ecosystem on cloud across a couple of cloud platforms. And importantly, as they've built their cloud platforms, they've been able to really change their cost model internally such that they run a very lean internal tech team. They do a great job of managing an ecosystem of engineering and development partners. And what that's enabled them to do is it's really changed the cost dynamics of that organization from day one. Cost to income ratio for banking has always been a challenge. And one of the ideologies that Judo had in coming into the market to service small business customers was to have a much greater investment in customer-facing relationship management. So by keeping their tech costs as low as possible, they've been able to displace that investment into their relationship management arm and thus provide a very differentiated experience. We're starting to see the value of that. Their assets on book has grown rapidly. They continue to scale. And I think the other thing that's important to note about the Judo story is that even after as little as 4-ish years as both a non-bank lender in the first instance and then an ADI when they got their banking license, they're already halfway through developing their second generation technology platform. And cloud has given them the means to do that efficiently and in a way that they can quickly scan the market for the latest and greatest application that supports where they want to take their business, whether it's onboarding, CRM, data analytics, whatever. So I think we're seeing not just the value of small agile change teams, but also a platform that from day one was built on a microservices architecture that is highly change adaptable in the future. The other example that I put in was just about Robinhood, and Robinhood I think is a story that a lot of people have heard, and there are many Robinhoods around these days disrupting the investment market story. Robinhood is a similar story in the same way that Judo have built with a small team. Miles, who gave us the quote, called out that they've been able to build on cloud with a very small team. So, I think that there's virtue in, obviously, it's a different paradigm for organizations that are starting from scratch, but there's a virtue what we're seeing repeated across a few of our customers where they've kept their internal capability relatively lean and really leveraged the ecosystem of partners that that cloud providers work through in the market. When I got to, I think it was about the end of last year, so it was about four-ish years into my journey with AWS, and I took a step back and I started to think about what is the small handful of things that I'm seeing that are consistent amongst those organizations on cloud journeys that are moving sustainably and are continuing to accelerate over time, versus those that are not so much, that are struggling, that maybe they've lost their way. And I sat down one day and I came up with what I think are broadly the 6 things that I've seen that make a difference in my experience over the last nearly 5 years working with all sorts of organizations, from tier 1 banks through to digital entrants in the market. What I came up with, and I've provided a few logos that I've called out that I think are exemplars in this matter. What I've found that consistently, without fail, top-down sponsorship of a cloud adoption journey is almost paramount. Organizations that have board and exec level awareness plus sponsorship of the journey go faster for longer all the time. So it's all about defining, the people in the organization who need to know, getting them versant on what cloud is and does very quickly, and being able to provide the business case about, the why for the organization. Organizations that have a well-articulated why at all levels of the business, again, consistently do much better when it comes to adoption of cloud. It's really important before you do anything to understand, going back to the slide that I talked about before across run and change, what are you actually trying to create for your organization and, importantly, your customers in the context of the cloud journey that you want to go on. And alongside that, be very definite about defining your target state so that you know when you get to a certain point that you actually met your objective of cloud. And look, every organization is different. We don't have a blueprint. I don't have a thing that I pull off the shelf and say, here's a target state. It really depends on the strategic imperatives of the organization and the problem statements that they have at the time. But it's important to define what good looks like when you reach maturity in cloud. Development of security and compliance, investing in understanding deeply the requirements that the regulators have of adoption, and making sure that you have capability either in-house or through an advisory that can help you measure up consistently to support the adoption journey that you're going on is really important. And we, as a platform provider, play a very important role in that when it comes to the accountability framework across cloud security, for example. So we've developed specific resources in our teams that help our customers who are regulated, particularly by APRA, go efficiently on that journey. Skills is probably, one of the biggest growing pain points in the financial services industry when it comes to cloud adoption. To use the well-worn phrase, the war on talent for cloud engineering skills has never been greater. And at an event earlier this year, I was talking to some local customers about their challenges in accelerating their cloud journey because they were just struggling to get their hands on skilled and experienced cloud engineers in the market. So that will continue to be a problem as more and more of the mainstream market continues to accelerate to cloud. But it's important to recognize where you are and what you need to do to get to a point that will sustain a journey. And at the bottom line, there's no doubt that across those logos that I've provided, every one of them had a willingness and an appetite and the sponsorship to do the hard yards with the regulator. There were many roadblocks and barriers to the material workloads that they've taken to cloud, and every single one of them has lent in, leveraged the right support mechanisms to get them to where they wanted to be, and really, paved, as I mentioned before, paved a lot of the path whereby others can now follow more easily, and importantly, that the regulator's been on a learning journey through that as well. I mentioned talent. This is just a framework that I developed working with a customer not long ago about how to potentially think about the competency that you need to support your journey over time. And just breaking down across the different competency levels, you need an element of experts in your team if you are going to run and change and run applications. And then you make a conscious decision about the weighting across your broader workforce, how you're going to grow them, who you need to reskill along that journey, how you're going to use partners in that mix because they are important. But ultimately, it needs to be a very thoughtful process and one that's developed early days. Otherwise, what I've seen is customers can sometimes start quickly, become really heavily reliant on, for example, an external partner to develop a foundation platform. And then 6 months into the journey, when the partner rolls off, they're stuck with a thing that looks really good and sort of works really well, but they don't know how to drive it. And that's really important. And we've learned from that experience of customers going down that track, and being a lot more deliberate about it now to get on the front foot and say, look, when you've gone through that initial foundation phase of building your platform, make sure that whoever is helping you along that journey has taught you how to fish. We're seeing more and more examples in the market now of organizations that have seen that importance. They've experienced the war for talent, and have deliberately gone out and demonstrated themselves as a place to be if you want a career in cloud. And I think that's really important. Just quickly on trends, because I'm conscious of time, I want to make sure we leave some time for questions that we might have. We are starting to see, moving from left to right of that screen, more and more customers pushing through the lower materiality, low-hanging fruit workloads of digital and grid, and to an extent, data lakes, data modernization, and really getting into core. For me, next year, core will be a big focus of the way that I go to market and the way that I help my customers across all sub-verticals within financial services. And behind that, with customers who've laid the foundation of a modern data architecture on cloud, helping them efficiently and with some level of speed be able to adopt higher order services around artificial intelligence and machine learning, which are essentials in the market today. One of the big workloads that we've had a lot of success with customers over the last couple of years has been our call center as a service product, Amazon Connect. As organizations come up to a commercial re-engagement point, often they're considering what other options are out there alongside their legacy telephony. And we've had, probably in an industry sense, more adopters of Connect in financial services than any other industry here in Australia. So FS seems to be really open-minded when it comes to moving away from legacy providers in the market. And we've had some great success with organizations like IMB. IMB were actually, back in 2018, one of the first organizations globally to adopt Connect as it came out of GA. IMB were going through a commercial renegotiation, decided to do a little bit of experimentation with the Connect platform. They had a couple of different business problems that they were solving for, but one of the key ones, interestingly, was an underutilization of employees in their physical branch network. So what they've been able to do, and it's been one of the biggest benefits that they've got from the platform, over and above just the ongoing level of configurability that they have as an end user, has been their ability through peak volume times to displace workload out of call center and into branch. And we've seen through the customer, through IMB, the levels of engagement of staff who were previously underutilized in branches has increased dramatically because they feel like they're actually part of the broader organization and are actually delivering more value to customer, which has been fantastic. So that ability to effectively switch workflow across multiple workforces in their organization has been a real great benefit that I hadn't seen before, which is fantastic. Just to round out, I mentioned before AI and ML becoming more and more prominent for organizations with a modern data architecture on a cloud platform. We've seen for a number of years now the traditional employment of ML for fraud purposes, surveillance at scale, particularly across use cases on trading desks, etc. More and more, we're seeing organizations use machine learning and AI where possible for an automation-driven agenda. And I pulled out Vanguard. Vanguard are one of our largest machine learning platform users globally. I think I pulled it out because they have a very different approach to the way that they've approached modernizing their data and using it to employ machine learning. And what I've seen a lot in the last couple of years has been what I call a horizontal approach to modernizing data platforms, which has been build a data lake, get as many source systems as you can to feed it, and then work out a bunch of candidate workloads to go and employ it with across the organization from there. Vanguard took a very vertical approach to their journey. So they said, look, we're going to define a couple of key use cases and we're going to vertically go down that line using the AWS data lake and the machine learning capability to solve specifically for a finite set of use cases with a limited number of sources of data that needed to be curated for that. As they've gone along that journey, they've learnt and experimented, and it's been a much better way to approach adoption at scale across what is, obviously a large organization. They're using ML in the first instance largely for automation, and particularly I've pulled out a couple of examples of where they're using it to get a better customer experience for those that are either using their digital channels and are struggling. So, tracking website behavior and providing them a better assistance if they're stuck, or the other way around, where they're getting repeat callers that are smashing the call center religiously for things that they could really be self-serving on other channels. So just a couple of easy examples of where Vanguard have been getting some value early days in their automation-driven agenda for adoption of ML. Lastly, just a very quick point to note on the consumer data right, which has been very topical in banking, but progressively is now starting to wind out across other sectors in the economy. Energy obviously will come online in 2022, and all going well, telco will come online in the year thereafter, touch wood. We're still seeing a lot of work that needs to be done in the banking space. I'm not going to stand here and point and pretend that it's all a bed of roses. There's a lot of work that still needs to be done to promote a lot of the data holders that are compliant up the curve into becoming data recipients and getting commercial value out of the agenda, and ultimately providing the critical mass in the market that will drive value back to Australian consumers, which is really what the consumer data right's all about. It's all about providing power to consumers to share their data. If organizations don't want to get it, then there's little value in actually participating at the moment. So we've got a ways to go on that, but we are seeing, conversely to where I thought we would be, we're seeing more and more investment and interest from the big four banks wanting to go on a hard data recipient journey. And Commonwealth, I just pull out as one note of interest in that they're now obviously starting to look further down the track at life beyond open banking and into open data, so cross-industry value for consumers that may be both a customer of the bank plus a customer of an energy retailer as well. So Commonwealth made a strategic investment in Amber earlier this year, I believe. And I think that in the not too distant future, we'll start to see some interesting use cases come out where Amber customers receive value propositions from the bank and vice versa. I'm hoping that there will be many more to come behind that. It really will depend on the willingness and the rate at which organisations start to invest to become data recipients. But I think it's a watch this space. We are investing heavily as an organisation in our capability to support organisations going to open data. I expect that beyond banking in the financial services industry, insurance and super will come within the scope of the CDR in the not too distant future. If you listen to the stories that Senator Hume talks about, we should expect that as a reality. That, Andrew, has been a really quick fly through in the time that we've got of some of the things that are going on across financial services when it comes to cloud adoption. Hopefully I've touched a few interesting bases for the listeners on the call. And yeah, let's go for any questions that people might have.
Thanks, David. Lots of interesting points in there. Yes, please use the Q&A Zoom function, send some questions in. David, while we're just waiting for some, you touched on culture, and cultural change is part of what's required to move to the cloud. What one or two things have you seen that drive most success in cultural change when it comes to moving to the cloud?
I think it's both it's a bit of a sandwich effect. It's the top down and the bottom up. And I think that both need to be somewhat aligned to make a bit of a perfect storm of an organization that gets it. One customer example that I didn't talk about, but we've done a lot of work with over the last 12 months has been in the banking industry, Bendigo Bank. Bendigo only started their cloud journey recently, and they've accelerated probably more than any other customer that I've worked with in the last couple of years, because there's been a very overt executive talk track on cloud and why the organization wants to use cloud. So Marnie and her exec team, as part of regular communications, will talk about the why. The board is very well aware of the agenda and both the benefits and the risks that they need to navigate. So they've been well versed and educated along the journey. But more importantly, I guess, is the organisation has quickly understood where their skills gaps have been, and like ANZ that I mentioned before, they've also put in a cloud skills guild approach to rapidly retool those that don't have experience but want them, and hire those that were in the market that had experience, and have done a really good job with partners. We've had some really important partners in there as well. But I think back to your question, Andrew, it's really the combination of top-down leadership saying the right thing about the why of cloud, and the bottom-up willingness to actually lean in and get skilled and get on the bus. That's really where I've seen it work well.
Yeah, David, in Iress, as you'll be aware, we've got many different software solutions, and our journey has not been one of lift and shift. It has been, how do we transform our software to get the best out of the cloud, and of course thinking about scale and resilience aspects and good architecture that will help us and clients move into the future. Superannuation industry has been around for some time now, and some of the technology in the industry has been around for a long time as well. And so, what do you see as an approach that businesses would think about in financial services? Lift and shift to get there, or do you think about how to really, to take bigger steps? Have you got some recommendations around that sort of journey for tech that is big, heavy, important, and maybe hard to change?
I think my personal opinion on the best way to adopt sustainably over time is to have a bit of a two-track agenda where you're looking for those opportunities to innovate, whether it be around your customer experience or to provide greater efficiency through your middle back office, so that you can create a solid story of the value of the investments that you're making in cloud. As one very important dimension, backed by a very conscious and deliberate approach to migration. I think, to your point, lift and shift is okay in some circumstances, but not all circumstances. The last thing we want to do is promote what we call your mess for less at our address. That's no good for anyone. So we want to help organizations across the 7 R's of migration consciously make determinations of stuff that should just stay and stay until it's retired, versus those that are cloud ready and can be rehosted, versus those that need to be re-architected and take a bit longer, but they take longer for good reason. So we have mechanisms to do that. But I think importantly, at the end of the day, having both dimensions to the journey is important from a sustainability perspective, because there's nothing worse than going on a large scale migration journey and 2 years later, the board or exec says, look, we're just not seeing the value of the money that we're plowing into this. So I think that from my experience in seeing organizations that have done it well, they've balanced that agenda of quick win driven innovation orientation plus doing the heavy lifting of platform modernization in the background.
Yeah. Thanks, David. We're a couple of minutes over time, so we might end there. For those of you who still have more questions, I'll ask you to please contact your account manager. They'll be happy to field those and provide answers or engage more broadly to get those answered for you. Thank you, David, for the presentation. It was pretty insightful, and thanks everybody for attending.